Hello everyone and welcome to my YouTube channel. This is More Trades and I hope you enjoy my video. So basically what I'm going to do in this YouTube channel is I'm going to overview the markets, different pairs. So basically I'm going to be working on three pairs which I'm currently trading. That's Euro USD, USD JPY and GBP USD. That's basically pound. So these three pairs I'm going to provide you daily videos regarding the review on how well my executions occur. So if our execution is, I think, it's profit. Obviously, there's no person on earth, no trader on earth that has have profitable trades every day. And if saying that he is profitable trades every day, 5 to 5 trades were profitable, it's very 1% chance that that type of trader exists. But every trader, including the big mentors, big giants or institutions, even they face losses. So don't have a delusion that there's a no trader in this world who is 100% profitable. So that's completely wrong information if someone is conveying you. So you need to change your mentor in this case. So enjoy. So now we are going to understand the dynamics of this Monday 27 April 2026, that how the day was, how you have to react to these price actions. You have to understand the dynamics of this market. See the price is changing. It's on 1 hour. We can say it's shift on 1 hour time frame. So this is 1 hour time frame. So you can see over here from 23rd of the April, the market gave a bullish shift in in this area at approx 7 a.m. in the market. So from now onwards, we're going to look for bullish. So that was the bias of our Friday afternoon trades, 1 p.m. basically, after lunch. So we took this trade, but I'm not going to discuss this one, Friday one. I'm not going to discuss this Monday one, the yesterday's trade, because I will not release my videos before the daily closing. So I was waiting for the daily closing. Then I'm going to make videos on that things, right? So from this was you can see on that this is basically London kill zone 2 a.m. in the market. So from this one you can see there's a bullish FEG, and there was actually two bullish FEGs, but the price was so bullish that it didn't came back to the to touch this levels. So the first FEG was more stronger and then drove the price to further higher. And this is another, we can say it's a bullish breaker block or key level whatsoever. It's just change of terms. I'm gonna say it's basically key level, 1 hour zone key level, what you are going, it depends on you also. So from that we see there were a lot of resistance over here. You can see you have to see these areas are very important for you. You can see this is your people says rejection block, liquidity sweep, what you are going to call it, but this is basically the, in easy words, this area is resistance. We have to understand this area is a resistance level, and we have further resistance over here. You can say wake off also according to ICD mentor, see, or rejection block according to many people over there. So basically this is the resistance. So we have to understand that whether this price is going to respect them or not. But the most important thing we have seen in this market, I'm going to delete out this video. Wait a second. Yes, now it's perfect. See, this key level was not respected. So the price disrespected this key level, but we are going to see a lot of people over there, they were planning to buy over here. Why they were because they were bullish and they were waiting for the price to reach this fair value gap, and then they're going to trade on smaller time frame. But this is not the case because we have to see the left side also. You can see the price is ultimately it's bearish overall from 15 April. You can see. So overall there's a 1 hour shift on that, and then another there was a break of structure also. This is a shift. We can say market structure shift. Then there was another market structure break. A break of market structure, depend what your terminology is saying. So this price it also even respected. We're gonna see the Fibonacci. Yeah, see it's the golden pocket which is 0.5 till 0.618. So it respected this golden pocket over here. We're gonna say see, and then price reverse got in the bearish direction and was a good trade over there. But right now I'm ignoring this part, but you don't have to completely ignore this. I am basically a day trader. So when someone is day trading, you have to focus on your right now what exactly is happening on 1 hour time frame. You don't have to look for 4 hour time frame or daily time frame or weekly time frame. It depends what exactly your entry or execution time frame is. My execution time frame is 1 minute, 2 minute, maximum 3 minutes. So I look for 1 hour time frame and 4 hour time frame. I don't look for daily or weekly or monthly because it's I cannot say that it's not important for me. It is important for me, but overload of information is also one of the most dangerous thing in trading, because a lot of traders, they are not profitable, not because they don't have a strategy. They are basically not profitable trader because they have overload of information. They have a lot of strategies and they got confused. Someone say they are implementing one strategy in one day and other strategy another day. So that's not the case, because confusion is very most important. Oh, something went wrong. Well, so what I'm gonna say that after this kill zone was disrespected, so people were going to buy from over this area, this PD area. This is basically 1 hour FEG. So, but this is not the case, because what we are seeing that there was another key level which wasn't respected, 1 hour zone which was not respected, especially the time frame we are watching. It's 8:30 a.m. New York pre-open, and then it's 9:30. I'm gonna show you on half hour time frame. See 9 a.m., 9:30 a.m. Over here from the price went to bearish. You can see there's also structure, breakout structure on inline chart. This is more comfortable to see the shifts in market and the direction of the market. Sometimes wicks they got confusing, so a lot of people they ignore wicks, but we don't have to completely ignore wicks, because wicks are very integral part of your trading. They tell you what is being liquidated, what side of the market is being liquidated, what side of market are being stopped, either buyers or sellers. So wicks are very important for us, because it's normally reasonable area where people put their stop losses and then see how many time market touch that stop losses. So you will see over there. So we wait for 9:30 a.m. Over here you can see there's a bearish FEG on 50-minute time frame. On 15-minute time frame, I got to know that there's a 15-minute. No, it's not. Sorry, my bad. It's not a zone. It's an FEG. See, it's 15-minute time FEG. So what I'm going to do? This is was my 1 hour time frame. So this will going to be my TP, right? This is going to be my TP area. So over here, what I did, I went to a 3 minutes time frame. Now from 3 minutes time frame, you see there's a completely beautiful shift in market, giving us a beautiful FEG, fair value gap, bearish fair value gap, and they're not one, two, the two fair value gap, and the price was so pressure there was in the price that the price didn't even came back to touch these levels. So even if you got this trade, but you are late in the market, so basically this is the professional levels. A lot of people they don't wait for the FEGs to touch that market going to come back and touch these FEGs. This is rare case. It could be easy 2.61 ratio. So 1 is to 2.61. This to reward ratio. That's a good, I think it's a good trade. But you were not able to catch this trade because this trade was very fast, very quick. So what you have to do? You have to go to a smaller time frame. I'm gonna go to for first. I'm going to go for 2 minutes time frame. Still, we were failed to catch this trade on 2 minute time frame. Now I'm going on the 1 minute time frame. Yes, now you can see on 1 minute time frame I got this opportunity over here. So I wasn't waiting for that. I just was waiting for the candle closure. I actually took this trade from over here because we have to keep in mind the spreads also, right? Basically, I use MT5. On an MT5, we use spreads. So this was my actual trade. I got a 1 to 3.3 approx because of the spreads and other things also. We have to keep in mind. This was the actual trade, but because of spreads, this was my trade. So I have to keep in mind the element of spreads also. Although you can get commission free account, and in that case you have to